welcome to part two of my discussion with Mark Galasiewski of Elliott Wave International about the Elliott Wave, an explanation for what drives price movements in financial market cycles. If you haven't watched part one, I urge you to go back and check it out before you listen to this discussion, because we're going to be applying some of the things we learned in part one to part two, with a particular emphasis now on what's going on in Asia, China, and specifically the Shanghai Composite Index. So let me welcome back Mark Galasiewski of Elliott Wave International. Mark, welcome back.
Thank you, Bob. It's great to be back.
So why don't you take us through what we need to do? Do we want to go back to the slides now? And
Sure. Last time I introduced the contracting triangle pattern, which is one of the more I would call reliable Elliott wave patterns, and it's also relevant, particularly to Asia at the current time.
Mm-hmm. Okay.
And yeah.
So here we are. We've come into the Shanghai Composite Index. You're going to tell us a little bit. This is your territory, Asia and emerging markets. So what is this showing us? What's going on in China right now, and as reflected by the Shanghai Composite Index?
Okay, right. If you'd like to go to full screen, that way you can blow it up on screen.
Let's do that right now. Yeah. Here we are.
Right. Earlier I was describing the contracting triangle pattern, and I gave a few examples allowing your viewers to essentially be an Elliott wave analyst themselves, and I hope that they were able to see how you can use this pattern, the contracting triangle, to anticipate turns. This one I'm going to throw them a little bit of a loop because this is the Shanghai Composite Index from about 2006 to the present. The high in 2007 you see up there on the left-hand corner, upper left-hand. And it's gone sideways in what could be a contracting triangle pattern, but I've thrown them a little bit of a curve because there's something wrong or something incomplete about this pattern. It's not ended yet. And so if you go to the next slide, I'll show you that in fact, it is incomplete. Wave E of the pattern is still in the future, the end of wave E. In other words, we still have to go through one more up wave and one more down wave to complete the A, B, C, D, E contracting triangle pattern before the market then resumes its ascent to record highs.
Mm-hmm. So your end of the bear market isn't happening in the next few months. I mean,
it hasn't happened in the next few months, no. And in fact, so this is why we're actually quite bullish over the next few years, couple of years, particularly on Shanghai stocks.
Mm-hmm.
But what I'd like to point out, this part of the discussion was also about the social phenomenon that attend these waves as we describe them. And you can't divorce them. You can't say that, well, this crackdown on Hong Kong is happening in a vacuum. It's not. It came from somewhere. The social mood in China at the present time, as reflected by the wave patterns in the Shanghai Composite, is actually motivating the crackdown on Hong Kong. And I'll give you some examples if we could go to the next slide. Right, now, China is an authoritarian state, but the wonderful thing about human beings is that whether you live in an authoritarian state or a democracy, you're still going to behave when it comes to the stock market or freely traded financial markets, you're going to behave and react to that environment in the same manner. The fact that China is an authoritarian state has no impact on the wave patterns, but it does have obviously an impact on the social behaviors that it shows, certainly to its population and internationally. And so what I've, so that yes, China is an authoritarian state, but within that spectrum, the authoritarian spectrum, it has particularly ramped up its authoritarian behavior since the 2007 high in the index. And some manifestations you can see of that ramping up, you can see on this chart. You can see in 2000 South China Sea. Again, it's becoming
Mark,
very
you froze for the last, you froze about 10 seconds. If you could back up what you were saying about 10 seconds ago and repeat, that would be helpful.
Okay, right, yeah. So that China has really accelerated its aggressive behavior, authoritarian behavior, since the 2007 high in the Shanghai Composite. What we're calling here a secular bear market, or what we're labeling on the chart is a continuing contract, a contracting triangle under development. And some of the the more visible or memorable expressions of that authoritarian trend, you can see in the red text and the red arrows on the chart. For example, in 2012, I believe it was May that year, China began building islands in the South China Sea, very aggressive international
Hmm.
expansion. And in 2013, it created a National Security Commission to prepare for the People's War on Terror. This was in response to several incidents regarding Muslim extremists in Western China, and we now, that this was essentially the foundation for what would become the detention camps that were built, between 2016, 2017, and 2018, to house and supposedly re-educate the Uyghur Muslim people.
Right. Hmm.
And yeah, and then most recently, you see here, in the wake of this Wave C decline, essentially the wake of this almost 5-year bear market, um, we now have China cracking down on Hong Kong. So
Hmm.
the way to, all of these are expressions of it's their insecurity, their fear during the period of this bear market, particularly toward the ends of the declines, that they begin to, that explains a lot of their aggressive behavior.
See, again, I have to reject this logical tendency in my brain to want to say I would have thought that when things were going the best, when the economy was at its strongest, when China was doing really well, that would be the point at which it would be bold enough to make moves. Then it would be moving into the South China Sea. Then it would be, clamping down on Hong Kong. But it waited until the cycle went down again.
That's correct.
So, yeah,
Exactly. In fact, we see quite the opposite, that during upswings, during bull markets, China is cooperative
yeah.
internationally. They tend to say, okay, I mean, and you're seeing it perfectly. And you do need to reject the conventional view, perspective, because this just makes everything so much clearer,
Hmm. Hmm.
I would say, if you look
Wow.
at it from what we call the socioeconomic perspective.
Okay.
Yeah.
We want to move on to the
Um,
next slide? You ready
sure.
for the
Yeah.
next slide?
Yeah. And so,
Okay.
yeah,
The
now and so
protests.
here,
Oh
this is
boy.
the Hong Kong. This is the Hong Kong side. From the Hong Kong
Right.
again, people, whether they're governments or the broad population, um, people become fearful toward the end of bear markets. That's why the time to buy is when blood is running in the streets, as
Oh,
Nathan Rothschild once said.
what a dark thing to say, but I
What a
guess,
dark thing to say, but oh, how useful.
yeah.
It's sadly true. I mean, here we have a list. This is most of these I collected from Bloomberg. They had a wonderful list back in 2014, and I simply charted them on against the Hang Seng Index, which is the Hong Kong stock market index, and look at them. And I have to admit, not all of them are dead are bullseyes. I mean, they're if you look at the first three in particular, I will warn you that those are 20% drops that occur. Generally after those riots occurred. But from a long-term perspective, those riots were excellent long-term buy signals for this market.
Hmm.
And we can see if we fast forward to the present, we saw the second to last red arrow, the anti-extradition bill protest last year in 2019. We have since seen a decline, far below, about 20% below the outbreak of those as well. So that's not necessarily these are not necessarily immediate buy signals, although many of them are. In fact, the others are in fact within 5%. They were excellent buy signals. But if you look at it from a long-term perspective, I mean, this is supporting my outlook as an Elliott Wave analyst. I analyze Hong Kong stocks, and I'm saying that this is very bullish. It's sentiment support.
Hmm.
It's from a contrarian perspective for my forecast, from my Elliott Wave forecast.
Yeah. Okay. You want to move on?
Well, that is the last of the
Oh,
charts.
that's it. Okay.
But if that raises in your mind any questions about how we view the world as opposed to how you may view it from the perspective of the Wall Street Journal or the convention
Well, it
perspective.
certainly does. It certainly does change my perception of the way this is going. But and also with China, I mean, everybody's wondering. I think we talked about this earlier about whether China was a house of cards in terms of debt, in terms of its banking system, in terms of its ability to continue this massive Belt and Road project and all of its international investments and its excess infrastructure. You keep thinking that the whole thing is going to come tumbling down at some point. And I'm wondering, how does that fit into the Elliott Wave perception? Is that like come on the heels of a decline? It doesn't cause a decline. I mean, how can we look at China's future from this paradigm?
Well, first of all, the house of cards that you're describing, and all of that was an excellent description of what you could easily have described the United States in the 1970s.
Ah,
In
okay,
other words,
right.
people had lost faith in the country entirely, and nobody, believed that it was possible to turn it around. And yet, it was my boss, Robert Prechter, who, when writing that book, Elliott Wave Principle, before Reagan was even a candidate for president in 1980, he knew that there was a major bull market ahead that he would eventually call the largest in American history. So, um, how do you make sense of it? You can only make sense of it from a non-rational perspective. If you were to look at, the United States in the late 1970s or China now and say, how is it going to turn it around? You can't rationally look at anything
Yeah.
and say, this is how it's going to happen. But somehow it does. So as you become more comfortable with waves, one of your tasks is actually emotional. You have to be willing to forget what you think that you've learned, and everyone's looking for that trigger, that catalyst that's going to cause the rebound or the recovery. And what you need to accept is that you don't need a catalyst. You don't need a trigger to pop a bubble or a catalyst to start a recovery. What you have to do is simply have faith that the wave that you're seeing in Taiwan, in the Taiwan index in 2008, is going to lead to a new all-time high. You don't know how, but
Hmm.
it is going to. And so this is why it's actually a much simpler way of viewing the world. And I think it's actually better. Um,
It's a message I think we really need to hear these days, because there's so much despair and people just throwing up their hands saying there's no pattern to anything. It's all chaos. And yet within this chaos, you are finding some kind of pattern that can really help us to see the world in a different way, and maybe really deep down make us understand human behavior more deeply.
that's right.
As a result, not something that is generated by government action, regulatory action, whatever, something that just bubbles up and then causes all that other stuff. It's a fascinating kind of theory, and I'm sorry that we were only able to just barely scratch the surface of it in this this two-part conversation. But www.elliottwave.com, is that correct?
That's correct.
That
As you see.
I there it is behind
Yep.
you. I urge our viewers to check it out for more information. But in the meantime, Mark Galasiewski, I want to thank you so much for enlightening me and knocking that logic part out of my brain for a few minutes at least. It was helpful.
Okay.
All right, take care.
Great.
Thank,
You too,
thank,
Bob.
thank you very
Look forward
much.
to talking again.